Hello and welcome to another episode of Your Retirement Planning Simplified. I am Joe Curry, along with my co-host, as always, Lindsay Wilson. How are you today, Lindsay?
I'm great, Joe. How are you?
I'm good, thanks. I was just thinking about how last time we were on here, we were talking about wrapping up with the majority of our client meetings for the spring kind of review period. And how this week we kind of got to change it up a bit. We had actually a bunch of new potential clients in. We onboarded a couple new clients. And so it's been kind of fun just to meet with some new people and start kind of thinking about solving some new financial planning problems and kind of getting things in place for people.
Absolutely. It's been an exciting time, a fruitful time.
That's right. And also, you have your play coming up very soon. Can you tell everybody about that?
Yeah. So May 3rd to 18th at the Peterborough Theatre Guild. If you're in the Peterborough, Ontario or GTA area and you want to come see a hilarious play by Morris Panage, you can get tickets at Peterborough Theatre Guild and you'll have a good laugh. Be great to see you there.
All right. So yeah, Kate and I are going to be watching the play. So we're excited. I think that's May 10th that we're going. Yeah. And, for everyone listening, Lindsay's always a bit modest, but she's the star of the show. So if you're around, check it out. All right. All right. So for today, we're going to talk about something. It's probably not going to be a long episode. It's a little bit niche, but definitely affects some of our clients, which is why we're talking about it today. And I'm sure some of our listeners. So we're talking about testamentary spousal trusts. Now, just to clarify, the reason we say testamentary spousal trust, the testamentary is indicating that it is established by the will. So once someone passes away, it's established after death. Okay. Mm-hmm. Now, when we're talking about it today, we'll probably just say spousal trust, or you might even hear us say TST. But we're talking about a testamentary spousal trust.
That's right.
Yeah.
So I think the best place to dive in would be to explain what the spousal trust is. Could you explain to us just basically what it is?
Yeah. So this is a trust that is established for the benefit of the surviving spouse. So for example, if you had a spousal trust in your will, when you pass away, your assets would then flow into this spousal trust for the benefit of your spouse who's still living, right? So we call that the surviving spouse. And so the idea again is it's to provide for them, is for their benefit, but also to maybe protect the surviving spouse or to protect the assets. So there's some different reasons why we would set it up, which we'll talk about in a few minutes. But it's a legal arrangement that allows those assets to be managed and distributed according to the deceased spouse.
Mm-hmm. And could you walk us through the process of setting a spousal trust up in your will?
Sure. Yeah. So, I mean, you kind of hit the main piece there. It is set up in your will. So there's some provisions that go into your will to outline how the trust is going to be established and managed. So that's going to include, any kind of restrictions on the capital, choosing who those trustees are or the trustee, and how the assets are going to be managed. So it can be, somewhat complex. So it's definitely important to work with your financial advisor and ultimately a lawyer who is kind of versed in estate planning and has experience with spousal trusts.
Mm-hmm. So why might someone want to include a spousal trust in their will?
Yeah. So there's many reasons really, but we'll touch on three of the, I guess maybe more common reasons here today. So the first scenario, which we've seen, is where one spouse, maybe their family has some wealth, for example. And we touched on this in our previous episode, talking about the sandwich generation. So, there's grandparents or parents still alive. And then there's the retirees kind of in the middle. And then they have kids and maybe even grandkids. And, in this scenario, so if one spouse, their family has some wealth, that they're going to inherit eventually when their parents pass away. It's not that they're thinking of this from the scenario where they don't want their spouse to benefit from that. But there is this thinking that if I pass away first, I want to make sure that money, whatever's left, is eventually going to get to my kids and it's not going to somebody else. Mm-hmm. Okay. Mm-hmm. So by setting up the spousal trust, if the parents pass away, money flows down to their child. If you are that child, then you can set up the testamentary spousal trust in your will, so that, during your lifetime, you guys spend that money however you want to spend that money. If you pass away, that money then flows into the spousal trust and it's there for the benefit of your surviving spouse. So the income is all payable to your surviving spouse. And then when your surviving spouse passes away, that money then goes on to your kids or whoever you name as beneficiaries. So that's one reason we want to do that, is again, making sure that wealth kind of passes through the family from the parents down through to the grandchildren. Another reason is protecting assets in case of a second marriage where the deceased spouse, back up a little bit, a second marriage where there's kids from a previous marriage in most cases. Okay. So if we think about that for a second, if you are married in a second marriage and you had kids in a previous marriage, and then you're coming into this relationship where your new spouse also has kids from a previous marriage, if something happens to you and you've brought assets into this relationship, again, it's not that you don't want your spouse to benefit from your assets, but if something happens to you, you probably want to make sure that your kids are the beneficiaries of the assets you brought into the marriage, as opposed to your spouse's kids. And sometimes this is set up where it's just kind of, it's not intentional. It's just, one spouse has a will that says everything that they have goes to their spouse. And then if their spouse is not alive, it goes to their kids. And if we have these kind of mirroring wills and we never took into account that there's kids from two different marriages, then if you pass away, all your assets go to your spouse passes away, all their assets, which include your assets, then go to their kids. So you've effectively disinherited your kids from your will. So the spousal trust, there's more than one way to do this, but the spousal trust is a way, again, something happens to you, your assets go into that spousal trust, your surviving spouse, during their lifetime, they can still benefit from those assets. But again, when something happens to them, the assets are then going to pass on to your children. So that's kind of the second scenario we have. And then the other one is, actually, I'm going to go with two more here. So another one is maybe you don't have, you're not in a second marriage, but maybe through some kind of experience or, something that, you've seen happen to someone, or just something you're worried about. If you pass away, that your spouse is going to remarry, and you're worried about, if they remarry, is that person going to get, again, all your assets, or are their kids going to end up with all your assets? Mm-hmm. So, if you've built up some wealth and, you've worked hard to get that, again, it's just a way of ensuring that if something happens to you, some money's going to be going down to your kids. Mm-hmm. And then the other one actually is, what if there's signs that maybe your spouse is incapable of managing those assets and you actually want to protect them, right? So maybe there's some signs of dementia or Alzheimer's, and you just want to make sure that money's there for their benefit, but they're also not going to, do something with it because they're, not in the right frame of mind, or there's some kind of disability, or, you're worried they're going to be taken advantage of by somebody else, right? So this is a scenario where, again, they can benefit from these assets. You have a trustee who you trust to kind of look after that and make sure they're taken care of, but those assets are also protected. So those are a few different examples of where the spousal trust makes sense.
I'd actually like to sort of jump onto that idea of a trustee and ask you, can you tell us who typically serves as a trustee for a spousal trust?
Yeah, so typically it's going to be a family member, trusted friend, might be like a corporate professional trustee, and it could even be this surviving spouse, right? So, you want to make sure someone reliable and capable of fulfilling those fiduciary duties, because they are a fiduciary duty, to look after the trust. And, there's some scenarios where maybe the surviving spouse is on there and also the kids, for example, right? So we might have more than one beneficiary on there. It's really going to depend on, why are you setting it up? What are you trying to accomplish? It's going to help you decide who is the ideal trustee or trustees.
Right. And what is the role of a spousal trust, and are there any requirements that must be followed?
Yeah, so it's important that the primary role of the trust is to provide financial support and security for the surviving spouse. That's the main thing here, right? So there are some legal and regulatory requirements that need to be followed when establishing and looking after the trust. So maybe from there, Lindsay, I think I'm cutting into your questions here, but there's some specific pieces that need to be in place to make sure that it's properly set up and there's no unintended tax consequences, for one. Mm-hmm. So the surviving spouse is the only person who can get the income from the trust, and the trust income has to be payable to the surviving spouse. So no one can withhold that income. It has to be payable. They're also the only one who has any right to the capital within the trust during their lifetime. So if it's set up in a way that anyone else can benefit from that trust, then there's going to be some unintended tax consequences. So that's really important. Now, that's not to say that there can't be some restrictions put on that, right? So the income has to be payable, but the capital, so that, the main assets in there, they can be protected. There can be restrictions on that capital coming out to the surviving spouse.
Right. I'm curious, what assets cannot be included in a spousal trust?
Yeah, so there's some types of like life insurance, but the main one that I think we'll focus on is like RRSPs or RIFs. So these retirement assets. And the idea or the point here is that if you're married, you're probably going to have your beneficiary on your RSP, for example, or your RIF as your spouse. And the reason you would do that is because if something happens to you, that's going to roll over tax-free to your spouse. So if you take money out of your RSP, as you probably know, that's fully taxable, right? But if you roll it over to your spouse, there's no tax to be paid until they pass away. So if you're going to put those assets into the trust, you can't actually have your spouse as the beneficiary. You need to have your estate as the beneficiary so that the money's in the estate to then go into the spousal trust. And what happens by doing that is now you have to pay all the tax on the withdrawal of all those funds from those accounts. So unless you're okay with paying all that tax, you're probably going to be rolling that over to your spouse. So that's kind of the main thing that you wouldn't be putting into a spousal trust, or well, it can't go into a spousal trust. And so definitely one consideration.
Are there any potential drawbacks to setting up a spousal trust?
Yeah, so there's some complexity, cost, and time to administer the trust. There could be some limitations, so maybe there's some more capital needed for the surviving spouse, and if there's some restrictions on there that can't, that prohibits them from getting that capital, then those limitations could be a potential drawback. So, and I guess the last thing is there's some potential tax implications. So this is not it's not for everyone for sure. And it's definitely important to be, getting clear on what your goals are for your estate planning and these assets. What do you want to have happen to them? And having, really clear goals on your vision for these assets is going to help you, work with your advisor, your lawyer, just to see if it is a fit.
Right. And finally, just to bring everything together, how would an individual determine if a spousal trust is right for them?
Sure. So I think it goes back to what I was just saying, Lindsay, about figuring out your goals, right? So, first it's doing your financial planning, figuring out your goals, your vision, and then part of that should be your estate planning, right? And so this is where we talked in the past about how investment management is not a financial plan. Even just like retirement planning on itself is not a financial plan. But we need to be looking at all the different areas of financial planning. And one of those areas is estate planning. So when I say, think about your goals and your financial planning, this is an area that should be a focus, is estate planning. And in fact, that's actually something in our practice, in our business, that we've been working on with all of our clients this past year has really been our focus. And so anyway, so going through that process and making sure you're clear on what those goals are, and then also considering, what are the family dynamics that you're working with, right? What are some potential future scenarios that you want to be able to plan for that you're worried about? And then in doing all that, then it's then working with your advisors, your lawyer, to then pick what's the best strategy to help you accomplish what you're working towards.
Any final thoughts or action items that you want to leave the listeners with?
I think it's pretty simple. I think I pretty much wrapped it up, but it's make sure that when you're looking at your financial planning, you're looking at all areas of your financial planning, including your estate plan and what happens to your assets when you're not here, as opposed to just trying to figure out how do I invest my money? What's the hottest stock? And, where do I take my money from?
I'll make sure to include our estate planner as well in the show notes for anybody who's interested in downloading a copy and looking at how they can start planning. Yeah,
that's actually a great point, Lindsay. And maybe I'll just give a little more detail on that. One of the things that we find is, sometimes people have done the proper planning in the sense that they've put their wills in place, they put their powers of attorney in place, but they haven't really organized everything to a place where their beneficiaries or executors can find that information. They haven't had conversations about why they made some of the decisions that they made. And it causes a lot of stress for that next generation. So, we've seen it multiple times. And so, part of the estate planning is, coming up with your goals, creating the plan, but then it's also getting everything organized, making sure your executors know where it is, and having family meetings and making sure everyone is on the same page so that, there's no additional unneeded stress when something happens to you. And also there's no unneeded kind of rifts between siblings and things like that, because people weren't clear on what you're trying to achieve. All they get to see is what you wrote down on your will, right? So that estate planner, what it can do is really help you think about all the different things that you need to take inventory of to get organized. So it's a really good starting place.
Yeah. And like I said, I'll put that in the show notes.
Perfect. Thanks, Lindsay.
Thanks, Joe.
Investment services are provided through Matthews & Associates Investments of Aligned Capital Partners Incorporated, an approved trade name of Aligned Capital Partners Inc., ACPI. Only investment-related products and services are offered through ACPI/Matthews & Associates Investments of ACPI and covered by the Canadian Investor Protection Fund. Tax planning, financial planning, and insurance services are provided through Matthews & Associates. Matthews & Associates is an independent company separate and distinct from ACPI/Matthews & Associates Investments of ACPI. Matthews & Associates are not licensed tax professionals, and you should consult with your tax advisor before acting on any recommendations.